Companies look to list at various stages depending on how they want to use the markets, how they want to grow, what kind of access to finance they need. Quite often we see companies that are at a relatively early stage looking to raise growth finance, but equally we see companies that are very mature and where they might have been in private equity or venture capital ownership, where they're looking to join the public markets to raise further development capital or to continue their growth. An IPO is the term that is used for companies when they conduct their initial public offering. So it's the first time that a company comes to the market to raise finance. There are lots of advantages of being a public company. Clearly, for most businesses, access to long-term finance is one of the main reasons for considering an IPO. But in addition, there are lots of other benefits in terms of public companies tend to have higher profile and visibility and often credibility with investors, but also with customers and suppliers. Being a public company also enables businesses to use their shares to acquire other businesses. It helps companies retain key members of staff, also using their shares to incentivise key members of the management team, key members of staff, by using share options. So there are lots of benefits of being a public company, including some of the obvious ones and also some of the softer ancillary benefits. At the London Stock Exchange, we operate a range of both equity and debt markets. From an equity market perspective, so the markets where companies issue shares to raise finance, we operate AIM, which is our market for smaller growing businesses. We also operate our main market, which has a number of segments. So a premium segment, we operate the standard segment where the levels of regulation are slightly lower. And then we also operate the high growth segment, which is, it sits between AIM and the main market for high growth businesses that aren't yet ready for a full premium listing. At the London Stock Exchange, we think it's really important to operate a range of markets so that companies and their investors have got choice. The ongoing requirements for companies will differ depending on the market on which they're listed. So the requirements for AIM, for example, are less prescriptive than on the main market. Broadly, however, the main requirement for companies is to keep shareholders and the market updated on a regular basis, both by producing half-yearly and annual results. But the core principle is to keep investors updated on a regular basis. I think there are many pros and cons to being a public rather than a private business. The key difference, of course, is being able to raise long-term equity capital from a very wide set of investors. I think there are lots of other benefits as well in terms of public companies tend to have a higher profile, which can help not just to secure investment, but it can also quite often help to win business. And that credibility can really underpin the company's ongoing development.